Hey guys, and welcome to the Strategy Lab video, and in today's video we will do the backtest of a 3-drive pattern. Recently we have a discussion on TradingView, and the discussion was about these 3-drive patterns, about the symmetry in the market, price symmetry, time symmetry. If you guys follow me for a while, you probably already know that I don't believe in price symmetry. I don't believe in harmonicity of the market. I believe in what backtesting say. And based on my backtesting, those patterns that are not symmetrical, those patterns that are not harmonic, they perform the same way as those patterns that are harmonic. I primarily did backtesting of the XABCD patterns, but I think that this rule is a general. That's why I extrapolated the rule of that harmonicity to the 3-drive pattern as well in our discussion. And it also was slightly supported by my research of swings, where I calculated the average size of swing, the average length, duration of a swing, and it is also was supported by my research of channels. If you guys will kinda imagine the 3-drive pattern, it is a channel pattern. So you have the first drive, you have kinda correction, yes, and then you have this second drive that should be equal as the third drive, and this forms a channel. Then you have another correction, and approximately it should be the third move, and after that third move we expect a reversal. So the reversal is expected to test the channel. So in other words, it should be equal to previous correction, yes, or it is expected to break the channel. Those of you who are fans of Elliott wave theory, you may notice the 5-wave pattern here that leads to reversal. You can also find this in some flag formations. Yes, you can also find this kind of not leading pattern. I forgot the name, the ending, the 5th wave, which looks like wedge. So this kind of channel here when you have that reversal here. Okay. Probably this is a good idea to do the test. Well, back to our TradingView discussion. So I was asked to do the back test of a 3-drive pattern specifically because my views, they are not based on direct backtest of the 3-drive patterns. They are based on other backtests, well, I thought this is a nice idea. And before we do the backtest, let's agree about some rules. So the general rule of this 3-drive pattern says that this 3 drives should be more or less equal. So what is this more or less equal? Let's label them as Y, X, A, B, and CD. So we label Y, X, A, B, and CD. So the A, B should be greater than or equal to 0.85 of YX. Why 0.85? Because I calculated 95, and that was very hard to find that. So the AB should be less than or equal to 1/15 of YX. So this is the rule for the AB leg if compared to the YX leg. So as you might have noticed, I give plus or minus 15% buffer. In this case, the minimal is minus 15%, maximal is plus 15%. Okay, of the YX. Let's talk about corrections. Fibonacci fans say that the correction should be minimal 382% retracement. If you follow me for a while, you already know that I'm not a fan of Fibonacci. Fibonacci is found in nature, But the market is not a natural phenomena. It is artificial phenomena created by humans. And all human behavior is actually generated by human brain. And human brain, it cannot perceive Fibonacci. It is not as powerful, human brain is not as powerful as nature itself. What can human brain do? It can simplify natural phenomena to create his own reality. Simplify it to the matter that he does not understand these Fibonacci's. Just try to imagine the 0.61A retracement. Just imagine that. Try to imagine the 0.382 retracement. If you never trained, you never do that. But guys, you will easily imagine half. You will easily imagine 1/3. You will even imagine a quarter. Very simple for a brain to imagine a quarter. You can also imagine 3/4. Yes, this is very easy for our brain. So if our brain operates in these quarters, half, thirds, and so on, why should the market do the opposite? The market is artificial phenomenon. It is not natural. It is based on human actions. Human actions are based on their brain, and brain simplifies the reality and simplifies the natural phenomena. Brain is our filter. It doesn't allow us to see the nature as it is. It only allows us to see a very small portion of nature. Otherwise, we would spend so much energy that we will die in a second or two, maybe. I don't know if the brain will operate all the information and present it to us. It will be impossible to think. You will have no room for your free will actions. You will be only busy actually perceiving what happens. Okay, so our brain simplifies nature. That's why it cannot operate with Fibonacci's. And this was I don't say that this was proven by my backtest. I just noticed that in my backtest, those patterns that terminate at let's say 0.75 retracement, they work better than those that terminate at 0.78, 0.786, which is the square root of Fibonacci. Square root of Fibonacci, I suppose, or maybe time second, or whatever is called this in English. Well, so the XA should be minimum. XA should be minimum. When we say minimum, this means that it should be greater than or equal to 0.3333, which is 1/3 of y-axis, and XA should be less than 1 y-axis. Why it should be less? It should not exceed the starting point. If it is the same size as y-axis, it is not a retracement anymore. It is a impulse. If it is the same size, it is an anchor leg, so-called anchor leg, the retest leg, in other words. And if it is much less than that, then it is a correction. Okay, well, the BC leg should be greater than 1/3 of AB, and it should be less than 1 of AB. So this is very simple. Okay, so now we know the rules of identification, and then we need to create some rules of swing identification, because this is a swing-based pattern. We should first identify swings, then we should measure those swings to understand the ratios between them, and only then we can label that and draw a pattern. Well, with MPS we have 10 swing identification algorithm. I just coded the most popular, the most reliable, those algorithms that were used by a majority of people during the history of trading. I tried to find the oldest, I tried to find the most reliable. Okay, so 10 swing identification algorithm. Believe me or not, every swing identification algorithm shows different performance with the same pattern. What I actually do, I do the backtest for this pair, for this time frame, with all 10 swing identification algorithms, and then I just pick up the best. For this pair, this swing identification algorithm goes better than that swing identification algorithm. Okay, it might be a bit strange for you to hear that word combination swing identification algorithm, but it is nothing but actually drawing these swings like this. In many cases you draw it with your eyes, yes, like this. So the swing identification algorithm will tell you for sure if you should treat these as correction or you should skip it. You see that? Actually, if we started doing this way, we should draw it this way. And this should be ignored. The spikes should be ignored. Okay. Well, so depends on how you identify your swings. So now you know number one, identify swings. Number two, identify pattern. If you have the same swing identification algorithm, trader, let's say trader A has swing identification algorithm, identifies swing, yes, and trader B identifies swings a bit different way, so IS2. Okay, will you think their results will coincide? No, the results won't coincide. So when you read in books that a Gottlieb pattern is 80% correct and blah blah blah, and no swing identification algorithm is explained, this means that you will never be able to repeat the results the author actually had in his backtest. You will never be able to repeat this market research. How it is done in scientific research? You do the research on, let's say, mice, yes? So you feed them with some food and then you see if cancer develops or not. This is the research. And then you write an article, and the research should be confirmed by independent labs. So independent labs that are not interested in this research, because we all know that this food industry, harmful or useful food products, they are actually tested by labs, and they are not tested because they want to test this. They tested because they are paid money by food companies. Let's say Coca-Cola is paying to scientists to do their research and to prove that sugar is not harmful for our body. So they hire scientists, they create lab, give them all the tools to do the test. So they do the test, and then, this is very important, then these tests, these research should be confirmed by independent labs. We know that the lab number one is interested in these results, and Coca-Cola company is interested in same results, but it should be confirmed by the independent lab, and it should be confirmed by another independent labs. So in scientific sphere. Yes, every research should be confirmed by a number of independent labs, and if researches coincide, then it. So why should trading be different? If some research is described in a book of some famous author who states that a Gartley harmonic pattern is blah blah and blah blah, the probability is blah blah, then independent traders should have a possibility to test that as well. Otherwise, well, it will be simply words. Okay, if trader A has this swing identification algorithm and trader B has another swing identification algorithm, their results won't coincide. Okay, so this is very important. So what happens if the swing identification algorithm is the same but the rules of pattern identification are different? So let's say trader A supposes that the XA leg should be minimal 1/3 and trader B supposes that the XA leg should be minimal 0.382, because trader A believes in decimal numbers, it believes in simple ratios, and trader B believes in Fibonacci ratios. What happens in this case? They will have different results. Okay, and what is more important, even more than these two, is the rules of engagement. By rules of engagement, I understand entry, stop, and target. So if trader A places the stop loss here and he executes that with a limit order, and he also executes the entry and target with a limit order. Let's say this is the entry, this is the stop loss, this is the target of trader A, and he has let's say this was market behavior. Then for a trader A, this would be a stop loss. Yes? Okay. And let's draw the trader B. Trader B executes his pattern here, and he places his target here and his stop loss here. Then this same market behavior for trader B is blue, will be a winner. For trader A, this very pattern is a loser. For trader B, this very pattern is a winner. So because of these entry, stops, and targets, because of these rules of engagement, the pattern probability varies. So now you see how silly it looks like when you ask me the probability of the pattern. Alex, what is the probability of the pattern? What is the probability of Gartley? How can I know what is the probability of the Gartley? I know that if you enter here, stop loss here, profit here, then such and such. But what is the probability of your Gartley? I just don't know. Because of this, and because of this. So if you give me this, this, and this, I can say, you know what, I never tested this very combination. Because the combination of these three can be enormous, infinite combinations of that. Or if I did the test, I can say, according to my backtest with this, this, and this, the result was such and such. Okay, finally, let's start doing the backtest. The intro is over. Let me attach the MPS, and the MPS users will actually find a slight different with their version, because this version is called 5.549 instead of simply 5.5. It is a beta version, and guys, here in this beta version, by the way, write some comments if you like that improvement, if you like that stuff that appeared in new version. We have plus and minus buttons. So you see, when we click these buttons, patterns disappear, and when you click the last one, it says let at least one pattern stay. Okay, and you can add patterns here. Before that, you were adding patterns here, so you always go to settings, you always go here, and then you add patterns. Now it became a bit easier to do. Well, Maybe if you never had MPS, you say, so what is the improvement? But if you had MPS, you know that there are times when you need quickly add a pattern, or you need to quickly delete a pattern. There are times. Okay, let's do. So the pattern that the 3-drive pattern has the name 3-drive pattern. All those patterns that are preset in MPS, they have code names, the preset patterns. So if we type, let's say, GAF, this stands for Gartley Advanced Formation, for example. So there are some settings for a 3-drive pattern. We should have a blue color. The B point. When I say B point, it's not exactly the B point of a 3-drive pattern. It is the retracement of the first correction. And we agreed that it should be 1/3 to 1. The C point, it is the second retracement. It should be 1/3 to 1. And in this case, it doesn't matter if your reference leg is AB or whatever. In this case, it doesn't matter. The D point, the entry, it is not calculated as Fibonacci, it is calculated as 1-to-1 movement. By the way, let's talk about the rules. Entry, stop, and target rules. So these are the 3 drives. So the entry, this leg equals to this leg. So this is the entry. Very simple. The target, this target equals to this target, equals to this correction. Very simple. So this should be the target. And what should be the stop loss? Imagine that this level where price should reverse is a support or resistance level. Just imagine that you have a support level. So when price approaches this support level, how you understand that the level is broken? Well, there is a very simple rule to understand this. If price exceeds the level by 1 ATR, you say that the level is broken, and you should actually trade a breakout. Yes, very simple. And if it does not exceed 1 ATR, then you expect a reversal, then you expect a bounce. So no difference here. It is absolutely the same. What I would do, I will add additional ATR, so the buffer becomes wider in case we identify the support resistance wrong way. Probably the true support will be here, or maybe here. Yes? Okay, so that's why we give 2 ATRs. Very simple and consistent stuff. 2 ATRs below or above the entry point. Very simple. So we type 2 and we type the specific code, entry ATRs, 2 entry ATRs. This is the way our stop loss will be calculated. If you're familiar with Gartley's, we place our stop loss above the invalidation point, and the invalidation point of a Gartley is the X point. It is not the entry, it is the X point. So you should place 1 ATR above the X point. In this case, we'll place 2 ATRs above the entry. The invalidation point of a 3-drive pattern, I don't know what is the invalidation point. I never met any description of an invalidation point. So let's treat this as support resistance. And we know that this leg should be equal to BC, BC leg, BC target. So if we will label that again, so this is the pattern, so we label it Y, X, A, B, C. So the target should be equal to BC. That's why I coded BC. If I use numbers, then the target would be equal to some other level. Okay, and the pattern appears. So what we can hear that this undershoots that. First of all, let's check if we have some new history. What I love about that MetaTrader 4 platform is that it allows you to download and import your quotes. Well, let's go to 1 hour time frame. Let's try to download. Go into download from this, run new data for that symbol. Okay, I did the download yesterday. Disable auto scroll, go to the very beginning, and let's go to our files. Open data folder, MQL4 files. Okay, we only have folders and we don't have any files here. To create files, backtest file, we add a FBU. Let's call it the BTC USD backtest, and let's set the spread to 0. Okay, we will add that spread a bit later. Now it says ready for work, and if we will go here to our files, we see that it appeared here BTC backtest BTC 60. Okay, probably I shouldn't use that BTC. So the start of that chart, this chart starts 10 August 17. Let's do the backtest. Let's do the backtest. Okay, so let's find a pattern, and you see this pattern completed, and this was a winner. So what is the time? The time is this bar. What is the pattern? The pattern is this leg. Press if it was a reversal or continuation. Reversal is N. It was reversal. Target 1 done. Okay. This one undershoots. So potential pattern, but undershoots that. Okay, going next until we meet another pattern. Undershoots that. We didn't have this. Okay, the first pattern actually completes, and the second pattern it doesn't. Okay, 1, the pattern is this. 2, and if it was a reversal, yes, it was. This one, 1, 2, it was continuation. No reversal happened. We had some reversal, but it didn't hit the target. Very small reversal. Okay, this consolidates, then it completes the pattern. So it is 1, 2, and it is continuation. Undershoots the level, undershoots. So we didn't have that completion of the pattern. Okay, this didn't complete with this strike, and then it goes to complete the pattern here. Okay, completing the first pattern. 1, 2, and it was continuation. And probably while being in this trade you had that stop loss, and at the same time this second 3-drive pattern completes. So it is 1, 2, and it is also stop loss. We stay objective. If there is a pattern, we must trade it. We should not skip it. Okay, same stuff here. 2 patterns, both are losers. 1, 2, loser. And the same 1, 2, loser. This didn't complete, invalidated the pattern. Bearish pattern, so let me disable that. Sorry. Bullish pattern. Let me disable a bullish pattern, and let me see how bearish goes. 1, 2, winner. Okay, this one. 1, 2, loser. Continuation means loser. Winners are reversals. Invalidated that correction. There was a potential pattern, but it was invalidated. 1, 2, loser. Okay, let's go. 1, 2, loser. Lots of stuff happens here. So the first one completes here, and then it goes to the first retracement. So we should go with 1, 2. Pattern was this, it was a win. And the second didn't complete. So the second terminates here. The completion is here, but price never went there. Okay. 1, 2, continuation. What is this? Nothing here. I should also add it to a pattern optimizer, the automated backtest that I created. But I think visual test will be also good. 1, 2, winner. 1, 2, loser. I remind you that we are testing Bitcoin. Bitcoin is 1, 2, loser. Bitcoin, to see if these 3 drive patterns actually work. Oh, this was a stop loss. Consolidated, then we triggered that and triggered stop loss. 1, 2, stop loss. Okay, 1, 2, stop loss. Undershoots. Wow, pretty many cases when it undershoots. 1, 2, winner. 1, 2, loser. Bitcoin 1 hour. So the results will be only valid for 1 hour. 1, 2, loser. 1 hour time frame. Okay, undershoots that. The entry is projected a bit lower. Undershoots. So January 20 we start this. Let me disable. Oh, how nice reversal. 1, 2, winner. And this one was 1, 2, loser. Okay, no completed, no completion. So the bull one didn't complete, bear one didn't complete. Oh, nice, winner. 1, 2, winner. Okay, it gapped through the entry and it gapped through the stop loss, and this one undershoot. So the backtest is terminated. Now let's go to our files, file, open data folder, and let's do some statistic calculations. Bitcoin. Okay, we have this number of trades, 27 trades, not the best stuff. And here we have ratios. You see this ratio is YX ratio, so you should understand that it is the first retracement. The B point is extension, the first extension. The C point is the second retracement. So it is the order is inverse. So the first retracement, then the first extension, and then the second retracement. Okay, offset is 0, stop loss is this, this, and this. What I should do here, this is European thing, when you actually separate your numbers by commas, decimal parts and integer parts, you separate by comma. But I have American culture info here, that's why it should be separated by dot. To do that, I just simply hit Ctrl H and I type this and replace it by this. Replace all. Okay, now we have commas, or now we have dots instead of commas, and now we understand that this is the thing. Okay, this should be first retracement. This should be second drive. I just mark it for my personal use. This is the second retracement. Okay, first retracement, and here Control H, and let it find y x, and let it replace with nothing. Replace all. Now they are turned to simple numbers. Okay, we did some stuff. The statistical block, it starts from calculating the number of trades. And the number of trades equals count of this range. It actually doesn't matter what range you take. Let's say the range of result. So like this. So total number is 26. Then goes number of wins, very important, and it equals count if within the range of results, yes, how many you have with more than 0 result, and you have 8. Then goes number of losses, and the number of losses will be calculated a bit different way. Total trades minus winners. Okay, 18 losses. So the probability of win, it is calculated as winners divide, it is calculated as winners divided by total number of trades, and let me express this as percentages. So the probability of loss, it is calculated as 1 minus probability of win. So you have 69% probability of loss. Okay, now let's calculate the average win. It doesn't matter if your probability is low, but if your winner is much greater than your loser, you still can have a positive expectancy. So the average win, it is calculated this way: average if, and within this range we are only interested in those that are greater than 0. It is an average win. Okay, and then goes average loss, and also within this range it equals average if. Within this range of results we are only interested in those that are less than 0. Okay, so let it stay this way. Okay, so the risk to reward, so reward to risk to reward, reward to risk ratio, it is calculated this way. We need ABS, average win divided by average loss. So the risk to reward is positive 1.5. So our average win is 1.5 times greater than our average loser. Okay, next, what we will do next, come on, the expectancy, math expectancy. So if the expectancy is greater than 0, that the strategy generates money in the long run. So the expectancy is calculated this way: probability of win multiplied what you actually win, and you win 1.5 of your risk, yes, minus probability of loss multiplied what you lose, and on every trade you lose 1, so it is calculated as 1. So this is the max expectancy, and it is minus 22. So it says that in the long run your performance will be this way. Okay, probably with this swing identification algorithm, Prax 6, you should trade the pattern inverse way: minus 22%, minus 22%. So this means that you should hit the inverse button, and you see what it does? It changes stop loss and target places, reverses the pattern. You see that? Okay, you see, it reverses the pattern. Probably you should trade in the inverse way. So what it says, the side back effect of that is that we were looking at swings that are approximately the same size. We were looking at swings that are approximately the same duration, and the result says that the mass expectancy is low. It shows that no reversal will happen. So the side effect of this backtest, it says that harmonicity, this symmetry of legs, leads to losers. So now we can conclude the opposite, that non-harmonic, non-symmetric will probably lead to winners. This is not this is not the guaranteed, but it is simply the conclusion based on opposite. So if harmonicity leads to winners, maybe non-harmonicity leads. If harmonicity leads to losers, maybe non-harmonicity leads to winners. So if the pattern is not harmonic, and if the legs are different, I mean, yes, then it will probably be a better winner. Okay, so my words about that harmonic blah blah stuff, equal legs and so on, they actually were supported by this backtest. So this objective backtest shows that on Bitcoin 1 hour, harmonicity plays bad role. Equal legs, they play bad role. Influence patterns badly. So look for patterns that are not harmonic. This will be much better. Okay, that's it for today. Hope you like this video. Please comment what you think about this backtest, about this the results that you actually just saw. Comment. Just right now start commenting this video, and like it and share this on social media. And until then, good luck and good trading. I hope to see you soon.